Good morning. It's Friday, November 8th, 2024. It's just after 11 a.m. on the East Coast, and this is Robert Sin at CEO Technician on X, at Goldfinger on CEO.ca, and this is Goldfinger Capital on YouTube. As always, if you enjoy this video, if you like the content I produce on a regular basis, please hit the like and subscribe buttons so we keep generating that content and sharing it with a wider and wider audience. This morning, I'm going to get right to the point, super laser video talking about gold miners are transforming into cash cows. And this was really evident here in the last couple of weeks. Like, obviously, the gold price has been rising for the last couple of years. We were at 1625 in September, October 2022. We just hit 2800 just recently, trading around 2,700 here this morning. So it's been a big move in the gold price. The gold mining stocks have moved up, no doubt about it. But for the most part, their performance has been a bit underwhelming when you consider the size of the moves in the gold and silver prices. Normally, we look for 2 to 3x the gold price move in the gold producers and even in the gold juniors. And until recently, that hadn't really been happening. But now we are actually seeing it in the financials of the major gold miners, both the senior producers and the mid tiers. The performance, the cash they're generating, the profit margins that they have in their operations is really notable. It's standing out in a big way, and we're seeing a lot of record quarters here in Q3. I'm going to highlight a few of them, a handful of them that really stood out to me. And I don't want to focus on the Newmonts and the Barricks. I want to go down the food chain a little bit and sort of explain why I think this M&A cycle is really about to take off in 2025. I think we're just on the cusp of a very big year in the sector. So we start with Kinross. They're like the number 4 gold miner in the world today, and they generated a record free cash flow quarter of $414.6 million in Q3, and they're on track to generate more than $1 billion in free cash flow in full year 2024. Here's their report that they put out just, what was it, 3 days ago. And it's impressive. The fact that they are down at $1,350 in the all-in cost, metric, and Newmont is up above $1,600, and even Barrick is above where Kinross is. That's impressive, and it really makes them stand out. And the free cash flow generation is really ramping up. Like, they generated $414 million in free cash flow in Q3. In the first 2 quarters, they generated a total of less than $500 million. So they basically did in 1 quarter what they had done in 2 quarters at the start of the year. So obviously that is due to the gold price rising, largely due to the gold price rising. But this really stood out. Their margins increased, so the cash operating margins increased to $1,501 per ounce of gold equivalent sold, outpacing the rise in the gold price. So that is nirvana for a gold mining investor. I mean, at the very least, you want to be able to capture the jump in the gold price. Okay, if the gold price goes from 2,300 to 2,500, you want to be able to capture that $200 an ounce margin in the companies that you own. They should be capturing it, right? If they're not capturing it, if the margins are contracting when the gold price is going up, that's a problem. And that's where there's something wrong with their operations or their management team, the way the company is being managed. But for the margins to expand wider than the increase in the price of gold itself, that is nirvana. And Kinross did that. That's something I have rarely seen before in my 3 decades of watching the sector. They reaffirmed their full year guidance, cost of sales and all-in cost, CapEx, et cetera, et cetera. So Kinross is firing on all cylinders, and their chart looks pretty good too. Not quite at a 52-week high, but very close. And it was interesting that on Wednesday morning when gold got thumped following the election in the U.S., Kinross gapped down like 8%, but that was after they put out this stellar quarter. So it was an incredible dip buying opportunity that I took advantage of. And hey, if you're a long-term investor, if you are a gold bull, if you like this sector, if you're digging what I'm talking about in terms of the M&A cycle that is just beginning, then I think Kinross is a must own in the portfolio. The chart is beautiful. It's a steady uptrend, but the performance is exceptional as well. The fundamentals are just getting better and better, right? And they have the Great Bear asset in Red Lake. That's something to look forward to drive future growth 5, 6, 10 years down the road. Lundin Gold, another gold producer, a mid-tier that generated record high cash flow with cash from operating activities of $218 million and adjusted free cash flow of $182 million. And I want to point out in the Lundin quarter, look at their all-in costs, $877. This is like the only of the large gold producers that's under $1,000 on this metric. I mean, I'm sure there's more than just this one, but this really stands out. There's not many companies out there anymore these days that are producing gold at an all-in cost of under $900 an ounce. It's pretty rare. And so how were they able to do this? Well, really high grades, right? Their average head grade in 2023 was 9.7 grams per ton for the same quarter, and in this quarter in 2024 it was 10.3 grams. So when you're mining ore that averages more than 10 grams per ton gold, that is really exceptional. They also got the recoveries up to 86.8 from 86.5, and they produced more gold. They sold more gold. Pretty simple. So grades went up, the recoveries went up, the amount of gold that they mined, went up, and the price of gold went up. Everything went up, right? So that's how you get a record quarter in the gold mining sector. So good for them. LUG on the TSX, and that is a beautiful chart, up 100% in 2024, and they earned it, right? Another company that's performing at a high level, Pan American Silver, record free cash flow, another one, a silver miner. I mean, of course, they produce gold and silver, but record free cash flow of $151.5 million for the quarter, and $20 or $21 per ounce of silver is their all-in cost. So silver's trading 31.32. So that's a pretty fat 50% margin for Pan American. And yeah, I mean, it's a strong quarter. It's a very strong quarter, and cash increased by over $101 million. So their cash is up to $470 million. Yeah, so just another gold silver miner that is a cash cow. The cash balance is going up at a pretty rapid rate. I mean, to increase your cash basically 20% a quarter, that's good. That's really good. And we're seeing that across the sector now. And IAMGOLD, which was my favorite one, which has been my favorite one, my top gold producer pick for 2024, they also had another exceptional quarter. They maintained full year guidance. But it's the Côté gold mine that is really the driver for this company right now. So their existing operations are good. They're solid, very profitable. Their all-in cost for their existing operations is somewhere around the $1,750 area. So it's a little on the high side. But Côté in Canada is their big new flagship asset. And this is going to be a real cash cow. Okay, so the all-in cost at Côté is between 11 and $1,200 per ounce sold. So you can see that is going to be generating a lot of cash flow for IAMGOLD once it's fully ramped up. It is in the ramp up process, and they maintain that they expect to end the year at 90% throughput at Côté. That is very important. And this I think is one of the big nuggets. This sentence, they are repurchasing 10% interest that they had previously sold to their JV partner, and they're going to return to a 70% interest in the Côté Gold project. So my spidey sense is something is going to happen here in the next few months. So once they repurchase that interest and get back to 70% on November 30th, so just a few weeks from now, they will, and then they exit the year at 90% throughput. Okay, if they manage to do what they're promising, I could see a transaction taking place here in January where somebody, a bigger miner, so think of the big ones, the top 5 would be the likely candidates. The one that I'm really thinking of is Barrick. I think that they either take the whole company or they acquire the Côté Gold asset, because you're talking about a mine that is going to produce 350, 400,000 ounces, maybe even more than 400,000 ounces a year, at an all-in sustaining cost of what, $1,100, $1,200 an ounce. That is a tier 1 asset. That is something that all the majors like Barrick, like Newmont, really yearn for, right? So I see this one at the top of the M&A list. Here's the weekly chart of IAG. It's a beauty. And last year I was thinking, it could double from $2.50 to $5. It did it. Well, here we are at $5.73. Can it get to 10? It's possible. It is actually really possible. When you look at how profitable this company will be once Côté is fully ramped up and at 100%, I mean, an $8 to $10 billion valuation with 2,700 gold is not insane. Okay, I think it's achievable. It's going to take some time, of course, but I think maybe a bigger company will come in and just snap it up here very soon. Okay, it was at the top of my list walking into 2024. I feel like it's still at the top of my list. Okay, it's just they are firing on all cylinders, high level of execution at IAMGOLD. So the gold producers have strengthened their balance sheets, right? In the last couple of years, especially in 2024, they've strengthened their balance sheets. They've leaned out their operations. They're in the process of it. Just look at Newmont. It's been a process. It's still going to be a process. It's still a work in progress, but it's happening. They're repaying debt, building up cash balances, as we saw with Pan American Silver, as we saw with Kinross, as we saw with IAMGOLD. And if gold prices continue to be robust, so that just, it means above 2,500. If gold is above 2,500, that is nirvana for the gold mining sector. Now, obviously, we want to see it go higher, profits go up even more, but we have to be grateful for 2,690, 2,700, 2,720. Those are great gold prices at which these companies can spit out huge amounts of free cash flow. I think over the next 12 months, we will see M&A accelerate with large producers acquiring the mid-tiers, okay? That's going to continue to happen. And then also acquiring assets held by the mid-tiers. So if they don't want the whole company, because a lot of the assets these smaller miners have would be non-core for like a Barrick, right? They're just not big enough. So they might cherry pick the biggest assets, the tier 1 assets, and then divest the rest and spin it out into a separate company. The mid-tiers are going to combine with one another to save on corporate overhead, to have more scale. Scale is key. Scale is key. In mining, bigger is better, at least from the corporate standpoint, and from the stock market standpoint, right? Scale matters. And when you combine two companies, you cut one side of the corporate overhead, right? So some of these combinations could save $10 to $15 million a year in just G&A, right? And then finally, the mid-tiers will be buying juniors. And that, I think that is one of the big stories that we're going to see in 2025. It hasn't really been happening yet, but I think we're going to see it happen in 2025. So I think this is a fantastic time. We are in a positive feedback loop where higher gold prices, more profitability, more good news, rising share prices, increasing sentiment among the investing public for the gold sector. And frankly, it's still early. Like, this is not even like, I mean, look at this chart of the GDX. It's up, it's lower left to upper right, but just even look at the last few weeks. We're in a correction. So even as these companies are generating these fantastic quarterly, results, these Q3, reports that are absolutely stellar for most of the sector, we're in a correction. So it's a little bit of a sell the news thing. Obviously, the gold price has taken a dip as well from 2,800 to as low as 2,650. We're bouncing back to 2,700 here, but gold is off the highs. But yeah, it's like, this is not overdone yet, guys. This is just getting started. And that's why I really want to emphasize that this is still early. This is still early. Pull this up to a weekly time frame, and let's make it like a 7-year. It's a bull market, but we haven't even broken out really above the 2020 high, right? Gold peaked at 2,089 in August 2020. Gold is 2,700 today. We haven't even broken out above the 2020 high that the gold mining sector reached in August 2020. So that, just to put it into perspective, that there is more potential here to the upside in the gold sector. And the seasonality, so from a shorter term standpoint, just here the next month or two, very often the gold miners put in an important tradable low in mid-November. So that would be around 1 week from now. So we might, these things never play out exactly, but I'm of the mindset that I want to be ready for a rally into year end. So starting now, over the next couple of weeks, I believe that's the time to load up. That's the time to pick and choose and put your portfolio together, to allocate capital, increase long exposure to the sector into year end, and sometimes we have a very strong rally in the final weeks of the year. And you can see, I mean, the seasonal tendency is strong. It's not 100%. It's between 55% and 75%, but the odds are on your side, right? You want to tilt the odds in your favor every which way you can. And I think that's the setup here with the gold mining sector into year end. So, looking for a bottom to this sector pullback here in November, and some tailwinds over the final 5 to 6 weeks of 2024. And then that could also be, accelerated and powered by the optimism of what the Q4 results will, look like when they get, announced at the end of January and early February 2025. And I think even with a company like Newmont that disappointed with their Q3 results, Q4 could be significantly better and serve to further raise the investor sentiment in the gold mining sector. So I think, and then Alamos, it's just another one that had a record cash flow quarter in Q3, but it's also been pulling back for the last few weeks along with the sector. But some signs of support here in AGI at $19 a share. Bullish engulfing printed on Thursday, but down today. Let's see how it finishes the week and what next week has in store. Some technicians are going to be a little worried here about the gold sector with this drop that we've seen the last couple of weeks. But I really think it's an opportunity to increase exposure at lower levels. Thanks for watching. And again, if you enjoyed this video, if you like my content, please hit the like button and subscribe to my channel, and have a powerful and peaceful weekend. Thank you.